Welcome to Cambridge House Live. I'm Bridgitte Anderson and I'm joined by Peter Spina, the president of goldseek.com. Nice to see you again, Peter.
It's great to be back.
Let's start off looking at gold. It was off about 30% last year. What do you think were some of the reasons for that?
Well, we've seen this ongoing process over the last decades of transfer of wealth from the west to the east. And the last year, we saw about 1,000 tons of gold leave the electronic traded products, ETFs, which is really a reflection of the Western investor selling gold and the Asian investor buying. So we've seen a huge liquidation of gold coming from Main Street, from Wall Street. We've seen the stock market, everything do quite well. Gold has fallen out of favor, and so there's been a huge rush out of it in the New York crowd and so on. We're starting to see an exhaustion of that supply, and the demand out of Asia remains extremely strong, record amounts. The amount of gold going into China is simply incredible. I don't think they can get enough gold in there that they would like to at these prices. So at these price levels, I think we're starting to see a dwindling supply of that gold available that they like to purchase. So,
what do you think that 2014 holds then? What's your outlook?
Well, I think we'll start to see these supply issues at these prices. We're seeing miners cutting back on their production because some of them are not profitable at these levels. We're seeing physical demand in China and India and the rest of the world quite strong. The West is starting to slow down their selling. So the second we start to see the selling reverse into buying, I think we'll see a really nice price increase, but it may not be right away in 2014. It might be later in the year. We may see a bottoming process occur where we see gold kind of trade around 12, 13, 1400. It definitely there's a lot of triggers out there that any point could hit, which could take gold significantly higher. None of them seem to be happening right at this point, so I think we're going to kind of just see a more of a bottoming process. A lot of trading opportunities, accumulation opportunities, and then later in the year, maybe into 2015, we'll see the price really start to rally again.
Well, what do you see happening with the U.S. economy then? There are some signs of economic recovery, but do you think that's sustainable?
No, I believe we're seeing the reflection of all this liquidity that's being injected by the Federal Reserve. Right now, the tapering question is on the table. We saw the initial taper happen. We probably will get a little bit more tapering. And now it's kind of a question is what happens with all that money that's on the balance sheets of the banks. They've got trillions of dollars. Are they going to start lending it out? Are the commercial loans going to start kicking the economy? Is that going to start igniting growth? But you see these corporations with trillions and trillions of dollars in cash, and they're not willing to invest it. They're not willing to take the initiative and invest into the economy right now. So really the only growth that we're seeing in the economy right now is coming from the Fed's injections, which is ending up through a reflection through the stock market, which is at record highs. We have real estate market starting to grow again, which is only being influenced by the Fed. So when they start withdrawing that cheap, easy money, what's going to happen then? And that's what I'm starting to focus on, worry about is this easy money period coming to an end. And
how soon do you see that? What's your time frame?
I think over this next couple quarters, we'll see them withdrawing some liquidity, and they'll want to see what happens if the economy kind of sustains itself. I think we'll see a little bit of growth here and there, kind of this a little bit of more of a stagflationary environment. And their biggest problem is if you get growth, then you get inflation coming into the system. And they're willing to have some certain amount of inflation occur in the system. They're more worried about the deflationary effects. Overall deflation is really the big threat out there. So they're trying to counteract that with all this easy money. So they're going to kind of play this game. We may see a bit of this tapering, and then at some point I think they'll have to increase it. They'll start printing more money.
And what do you see happening with silver then, and the impacts of your take on the economy on the price of silver?
Well, it's got that two levels. You got the industrial side, which will have an effect. China is starting to see some issues there with growth. So we'll look out on that front. But overall, what will drive silver is the investment demand. Any sort of slack in the industrial demand will be overtaken by the investment side. We're seeing some really strong investment demand come back into silver. To me, silver is more of an opportunity now in the short term than gold is.
However, you did recently note that the paper silver price is being distorted by the banks. So talk to me about that.
Yes, just like in the gold market, and actually something very interesting happened last week. We had one of the main financial regulators in Germany who's investigating the price fixing issues right now with Deutsche Bank and other banks there. He mentioned that he believes that there's some substantial manipulation in the gold and silver markets. So I think you look at the main traders in the gold market and silver market, JP Morgan being predominant in the silver markets, they're using paper to short the market. We're at 8-year levels right now in the amount of short positions in the market, and they're able to kind of just sustain these lower levels. If you look at the leverage right now, we have over 100 ounces to one leverage in the market. That means you have over 100 ounces paper claims to 1 ounce of gold in the market. So it's not a true market. It's this paper game that they're able to trade multiples of what really exists, these derivatives. And at some point, when people really want to take that physical and say they want to take delivery of the silver or the gold out of the COMEX, it's simply not going to be there. And that's going to, I think, result in the destruction of the COMEX market. And at the same time, we're seeing other markets established in China and Singapore. They're looking to become the main markets in the world.
Well, and is that really viable?
Not immediately, but longer term, I believe so. We have Singapore, they're looking to become about 10% of the global gold trade in the next few years. They're building a vault in China, which is capable of holding several $100 billion worth of gold. These are just a reflection of how the West is diminishing, how the power is moving over to the East. And with these markets in the West that have been highly manipulated and don't really truly reflect, like in gold and silver, the true reflection of price, because they're being traded with just these paper contracts, eventually no one's going to really trust them anymore, and they're going to move to markets which they can trust. And there's a real opportunity for China and for other places in the world to come and
So you see that demand from Asia still continuing regardless?
Absolutely.
Yeah.
They have a different mentality about gold. The average Chinese investor sees gold as a safety, as an asset, as money. They don't have the same view as the Western investor does, which is very short term, which is a 1 week, a 1 month, a year long perspective. They see this as a way to save money. They see it as a way to preserve their wealth, to hand it down in future generations, and they'll continue to buy more and more. And their wealth in that part of the world is growing very quickly. It's amazing to see how quickly they're rising. So with all that money, they'll continue to be buying. And it's just not the private citizens, it's the China itself. And that's, I think, the other big story. China is looking to make their currency a competition to the US dollar. And to do that, they're going to have something like gold backing it, something that they can convert it into back that the Chinese want. So that is a process that's ongoing.
Do you see that happening in the near term, though?
It's going to take some time. I think it'll be a process of 2, 3, 4, 5 years where they're creating these arrangements of China, Japan, China, Europe, where they will exchange goods and services for instead of US dollars, they'll use their own currencies. So they're starting to create new arrangements, new contracts, and trading between their own currencies. So it'll grow over the years and eventually become a threat. But I don't think still that they can really take over the US dollar at this point. It'll take more things, and gold will be one of those aspects which gives their currency credibility. So we're going to see a big announcement this year from China. They last announced they had around 1,000 tons of gold. There's estimates of about 2, 3, 4, 5,000 tons of gold that they'll announce that they've accumulated. They don't do it every year. They do every, I think, 5 years an update. So we'll have an update this year on what their current gold holdings are. And that should be a big item to watch out for.
We'll be watching that. Thanks very much, Peter.
All right, thank you.